All right, so wanted to come in today and just discuss a quick how-to guide, how-to video here on our VACO Technical Quicksheet. This will accompany the quick sheet here on the website, and also sent out in the morning and afternoons, so you guys are well aware of the reference points we're looking at, the posture ideas, VPOCs, just key highlighted numbers that we want to be looking at in these markets. Before we get into things here, I did want to start with the disclaimer. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and or investors. This is a solicitation. Now that we have that out of the way here for you, we did, again, just wanted to highlight what we're really looking at here with this quick sheet. Again, let me just choose my pen color here. I'm going to go over this, and then I'm going to go over into a chart of the S&P 500 to just kind of give you the chart and the quick sheet version of this. So as you can see, you're going to have the description of the contract we're using, the ticker that we're using, and something to keep note of. We're going to try to keep these tickers and these levels off of the front month continuous chart. That's the levels in the contracts that we're going to be trying to use, unless otherwise noted. So kind of keep that in mind for you. Progressions are going to go grains, meats, financials, currencies, energies, and metals. More or less, a lot of our core ideas, trades, strengths kind of fall in this grains, meats, and financials and currencies. Energies, metals will have their place, but they're kind of down on the progression list. So you can kind of look at that as sort of a progressions of, what we really like to trade or want to be trading, starting out from that perspective. Moving into the VPOC here now. Now the VPOC stands for volume point of control, and we have the table legend up here for you guys, as well as the current date that we're looking at. But the VPOC we're going to use based off of a 1-year chart. We'll try to get it a little bit closer on some of these other, as I'll show you in the S&P 500, where the daily VPOC is a little bit further than, let's say, a 3-month VPOC. So we're going to try to keep things somewhat relevant by using those 3-month VPOCs. Again, I'll kind of describe that a little bit better here in the when we get over to the charts. But again, this is the volume point of control. It's the most traded price on the given time frame that we're using, and it's going to have the most value at that price. So it's going to be, essentially a very good reference point for, again, where the biggest volume and where the biggest transactions have taken place on the chart and in the certain contract. Downside reference points and upside reference points, those are simply levels that we want to be, think of them as possible decision levels for trades. We want to be highlighting key volume nodes that are not quite, a VPOC, obviously, but are still important nonetheless to be really considering, again, to the downside or the upside. Now, using those via trade management could have many different facets. You could be using something for support, something for resistance, something for more confirmation that the trend is continuing here. There's a lot of different uses for these reference nodes, and I think that's why we really wanted to use more of that reference narrative around it, because it is just that. It's a reference. It's something we want to be cognizant of if and when price does come in and possibly trade that. And then it gives us an awareness level to just really, if we need to do something or not do anything, we can at least kind of review that if and when a reference point is hit. Obviously, the last price column here is just that. This is the last price given on the printouts. It's whenever we print off the morning or the afternoon, obviously that'll show the last price given there. And then another big one here on the far right is this posture ideas section. Posture ideas, this is where we get a lot of questions, long short versus a level. Long short versus, 40.76 in the S&P 500. That's a level that we want to be, the way we explain it is, if we're above 40.76, current price, we want to be looking for long executions. We want to be leaning to the long side um, as long as we're above 40.76. If we come back below 40.76, we want to adjust that posture, that thinking, and that narrative to go now more to the short side. So if you're long, that could be a stop level. If you're looking to be short, that would be your ideal quote unquote entry level. Now, as far as execution goes on this, that's where it opens up a little bit more, narrative, explanation, detail. But from a simple, fast and slow type of narrative here, this is essentially to us a very important level on the chart. Is that 40.76 is that long short level that is currently that we're currently giving there. So use that to your advantage. Again, once I get over to the charts here, I'll kind of explain that a little bit in more detail, how it looks on the chart and how we want to be utilizing that, coming in and thinking about trades and going forward from there. Alongside of that, and next to that, that'll be showing up in this space here is this recommended execution. If we start to recommend trades based on, this quick sheet or what we're seeing in the markets here, we will really have no issue putting recommended executions in here. It'll be labeled or color coded based on directional spreads or neutral option plays. So in green you'll have, if it's green highlighted, that'll be a directional play. If it's blue highlighted, it'll be a spread play, and then if it's orange highlighted, it'll be a neutral option play for you there. So kind of some nice explanation there of kind of how this quick sheet, really how we want it looking, how it explained, to you guys here, so you can best use it as a resource going forward. You really, looking at this, you really don't need a chart in front of you. Obviously, it's extremely helpful to see a chart, but really these are the most important levels that we are, deeming necessary to look at here for these given contracts. From a short to intermediate term time frame, I would say anything over intermediate, longer term. There certainly could be some longer term implications at these levels, but as far as like time frame goes, I would say shorter time frame to intermediate time. So like I would consider it hours, days, and weeks on that front as far as what you're looking at, how you're using these, and hopefully you guys can really see the benefits of it. I'll head on over to the chart here now. This is the S&P 500. And again, just wanted to highlight on here you'll see the downside reference nodes and then upside reference nodes or labels that we have. So again, we're highlighting, like this downside reference 2 level at 3,900, which again, we show right here, downside reference 2. This is a pretty big volume node that the S&P has really launched off of here to the high side. So this is a high reference node for us if we end up coming down and touching that at some point. Same type of thinking here for downside reference 1. It's just a little bit closer to current price. We've actually come in and kind of tested that here over the last week or so. So it's something that we're very, that's going to be a little bit closer to current price. It's something that we're going to be paying a little bit more attention to, in the immediate time frame. And then obviously upside reference 1 and 2 here usually will be either price counts that we can kind of start dictating off of Fibonacci levels, or high volume nodes up above, support and resistance levels up above. Again, it doesn't mean that we have to necessarily act at those levels or need to be acting at those levels, but it's something we want to be aware of, in the coming sessions, that if we start to come in and tag these levels, we need to be looking at them and monitoring them for certain trades. It really kind of puts us in the atmosphere of saying, hey, if we start to touch a downside reference level 1, are we still, looking long? Are we still looking short? So on and so forth. And if so, how can we trigger into a certain trade on that front? So again, that kind of explains the The reference levels, the VPOC is kind of very similar. Again, you'll notice the VPOC on the daily chart is way down here at 33.53. Well, it's nice to know, and we certainly want to pay attention to that, but it's not really relevant for where we are at current price and current levels for the shorter to intermediate term time frame. So that's where we come in and start to use these shorter VPOCs, as you can see, the 3-month volume point of control here that we want to be kind of zoning in on there. So that's why you'll see some differences there on those charts. And then finally here, just the long short versus certain levels. That's where we come in. And right now we have that 40.76, so it's right down around this downside reference 1 level. Again, you'll see we're currently above that. We've been testing it the last few weeks, well, last few days here especially, and we want to be looking for that area. It's exactly that. It's a key inflection point, and as you've noticed over the last week or two, we've seen some battling there of buyers and sellers. So far the buyers are winning that battle. We've closed 1 day below that 40.76 level, and we've been above it. We've tested it now a couple days, and we haven't been able to close below it. So again, we're looking for longs if we remain above that 40.76 level and trying to target higher prices. Obviously, now that we're 41.62 right now, so that might not mean that you want to just automatically jump in. Now it's basically saying, hey, we want to be looking long. Now, how can we get your risk reward ratio, your trigger to get you long in the best case scenario possible for that risk narrative? That's really the next step beyond that. So there's more. It's more to the detail than just coming in and being long and short versus level. Obviously, it makes it very easy to communicate. But then where we think we can come in is say, hey, here's what we have going here. Here's what we like. Now let's talk about what works for you. As far as do you want to be long, and then how much risk do you want accompanied by that, or do you want to be short and let's wait for a trigger below that 40.76 or at that 40.76 to kind of trigger that short into. So it develops some conversation, it develops some narrative, and it really asks the right questions of more if-then statements, and really takes the emotion out of the markets. That these markets can give a lot of emotion, for these ups and down moves, and just everyday action. Again, just trying to take the emotion out of it with a very simplified, technical quick sheet. We hope you can, gain some value from it. And as always, feel free to ask questions. We're more than willing to work with you here on, understanding just exactly how we should be using this, even to personalize it to your experience. We have our directives and our expectations with how we want to use this, but if you're seeing something different on how you want to use it for your personal self, these numbers, let us know, and we can certainly, walk through that with you. Again, I will close with a disclaimer. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and/or investors. This is a solicitation. Thank you.